Hey mate, you're in XTZ, looking for longer term position, longer term thoughts on your position, looking to add more. Let's just have a look. I want to zoom out here. This is the Coinbase chart. It has been a disappointing coin in the fact that, you know, I really felt that it should have held kind of above these moving averages here. And continued this move. You know, I do think longer term we take out this range, but I was disappointed to see it break down below these moving averages. Sometimes that's what a chart needs, though. Sometimes you need to break down and then build that base to fuel, you know, the next big move. Even if it just on my other part of my screen here, you can even just see Pearl. You know, sometimes you need to break down like below all moving averages and crash right down, build a base, and then you get the big move. So you know, it may not be the end of the world or anything, considering we are in a bear market, right? There's a few positives about this. We're in a bear market. A lot of altcoins have dropped 70 to 90%. You know, you look at this and it's holding up really well, down 65%. I would say 80 to 90% of coins have dropped more than 60%, I would say. Like even Bitcoin dropped 50%. So this is holding up almost on par with Bitcoin. It was you know, to be honest, it's a very, very nice short signal up here when you get these double top, round it back up and you get this double top, and you know, it's hard not to sell into that, to be honest. So let's look at a few of the larger time frames to see what is going on here. You know, when you look at the yearly chart, it just looks to be building a base. Like if you actually look at it, it really does look to be just kind of building and stuck in this range. That was the way I drew that was terrible, but you can see the clear as day resistance on a yearly chart. It runs right along here. Anything other than it was wicks above. So price has not been able to establish itself, you know, above this range. And if I just go back here and have a look at this, we'll go to a weekly chart. You know, price has not been able to establish itself above here. These have been yearly open and closes right here. Everything else has just been wicks. So at this point we're down below that. Price needs to get finally get above this and establish itself, and then it's probably going to make its way and actually break out higher than the range. So at this point that has struggled a bit, but you know, on a yearly basis it really does look like it's building pressure, and the closer when you start to close up close to resistance, you know, there's more likelihood that you're eventually going to break that. And conclusively break that. So it does look to be building to be able to do that. Like on a yearly chart, you could probably look and make a case for there's some sort of a bit of a bullish pennant. Maybe I'll drop this down some time frames to get a bit of a better look at it. You can kind of see here, you know, price is grinding up into this resistance, and you know, is it a new 6-month candle that it needs to break up and do that? At this point, it's unlikely that this candle will flip green. If you like, it's a knife catch to add to your position here now. What if the market actually drops lower on a new 6-month candle? What if Bitcoin does actually drop on a new 6-month candle, and you know, what if this actually dropped back down to retest, you know, my buy big level? Like if we got a flush back down there, I've got buy big down here at $1.50. Price never came back for me to do that. But if imagine it did flush down there in a Bitcoin crash, for example. But what I'm trying to get at is, if you want to add long term, it might be safer, you know, to trade a new 6-month candle. If it flips green, you know, then you know you know where you stand. If it stays green, you know you're in a good position to move higher. You might not have caught the exact lows, but it may be a safer trade because this is a bearish engulfing candle at the moment, and bearish engulfing candles, although it's 2 months away, they can cause more downside if it closes like this. So, you know, it's entirely up to you. You know, if you wanted to continue to maybe add a little bit here, but you need to be prepared to add lower. I don't know what your average price is at this point, but for me, the safe trade, you know, may actually just be on a new 6-month candle. You may not catch the very low, or it may actually save you, and if price does go lower, you'd be able to add a lower price. But by waiting until a new 6-month candle, and I know that's maybe not what you don't want to hear, but that might be the safe option, because if failed moves equals fast moves in the opposite direction. So if this does finish bearish like this and this flips green and actually pops up, well, there's a good chance that this could continue to go a lot further, because this would then be a failed move. So that would be the play, to aim for a bit of a failed move here. But the 6-month candle needs to stay green. If it does flip red again, you may have to consider getting out.